So we'll start with my pick, which is Airbnb, the home rental company under some pressure today, and that's ahead of its earnings report for Q3 that's out tomorrow. Now, that's interesting as the company has enjoyed an earnings beat for the last 5 quarters. Now, the street is expecting earnings per share of $1.47. That's a 20.5% year-over-year increase on revenue of $2.84 billion. That's about 26.8% higher than the same quarter last year. Now, it's interesting because longer-term stays of 28 days or more are actually Airbnb's fastest-growing category versus 2019 and should still be a boost for Q3. Now, investors will be eyeing it as a gauge of where the consumer is, especially when you consider a softening labor market and, of course, more pressure from employers to return to the office instead of some of these longer stay places that people are renting out. Now, according to Seeking Alpha, Airbnb actually has more rooms listed on its platform than the top 5 hotel chains have in their portfolios combined. And that's on top of competing with traditional hotels. We're seeing Airbnb also expecting growth with its Experiences booked unit. So really trying to branch out here, Josh.
Yeah, Rachelle, I'm excited for this call, mainly because I think we get a great idea of the consumer and also where Americans are at in terms of return to work, right? You mentioned that long-term stay has been a consistent growth spot for Airbnb. Does that continue again into this quarter, and does it keep continuing to grow as it has been? As we do see more and more people returning to the office, I'm curious if that part of the business maybe fades a little bit.